What's going on, traders, and welcome to this learning session where I'm going to teach you how to draw support and resistance levels on your charts. So first of all, just to be on the same page, we do need to go over a few definitions, and this will sound like theory, but don't worry, we will go ahead and mark up some real charts after this. So first of all, support, what is it? It is an area of demand, essentially. You can think of support and resistance as supply and demand, where support is the demand portion. It's an area where price seems fair enough for buyers to want to buy more shares. And what that looks like, just in terms of theory, is something like this, where we have a level. This green level here is known as our support level. Price comes down and touches it. Once here, buyers determine that this is a fair value for the price to be at. They want to buy more shares, and when there's more demand, price increases. Same thing happens. It comes down to this historic level. Buyers determine it's a fair price. There's demand. Prices then increase. So it turns into this level that's hard for sellers to break down because buyers have deemed it essentially a fair price. There's more demand at that area. It always seems to bounce the price in the upwards direction. Now you can imagine that resistance, on the other hand, is going to be the exact opposite. It's an area of supply. It's a price level where traders want to sell their shares and get rid of them. They don't want to buy more, and it essentially looks something like this in theory. And again, it's the exact opposite of our support, where we have a level here where maybe price seems to be too high. Maybe people are taking profit all at the same time. Essentially, there's a greater supply than demand at this level. Therefore, prices back off, and there's a downward move that follows. Same thing happens here. You can see it's at the same level as in the past. People determine that this is too high of a price for the share to be at. So there's supply. Next move is downward, so on and so forth here. Now, this is all theory. Of course, we're going to go over this on some real charts in just a moment. So there's three key steps to determining where you should be drawing your support and resistance levels. The first one is going to be that you need to pick the appropriate time that you're trading. So if you're trading, for example, a 5-minute chart, you really don't want to be drawing your supports and resistances on a weekly chart. And the same is true for the opposite. If you're trading on a weekly time frame, then you're not really going to be concerned with the 5-minute chart. The next step is that we want to draw levels that have the most data or touches. So when we're looking at a chart, we'll see this in just a moment. If we have a level that has all these touches, 1, 2, 3, 4, say there's 5 touches to a level of, let's call it support at this point, then that is going to be a more important level than, let's say there was a touch up here, a touch up here, and then a touch down here, and we drew our level somewhere in here. This will make more sense when we're looking at an actual chart, but we want to aim to get the most data points on our support or resistance level and not sort of cherry pick the exact top or the exact bottom. And this sort of goes into our next key step down here, and that is that we're using the zone effect. So when you draw a support and resistance level, it does not have to be to the exact penny. You'll stress yourself out. You'll probably think in your head, did I get it right? Did I get it wrong? Is it going to go exactly to this level? And those are all questions that are valid, but if you're using the zone effect, then you know that when you have a horizontal level, then essentially what you're looking for is price to come near it, and it could go slightly below, it could come slightly above, it could go exactly to it, it could break down and then come back up and then retest it. There's a number of different things that could happen around support and resistance, so you want to be using the zone effect and not only get into a position if it comes exactly down to the level. You don't want to miss a trade if it doesn't quite come down to your level. Again, this is the zone effect and a key to using support and resistance properly. So to do our real-world examples, I'm using a platform called Thinkorswim by TD Ameritrade. It offers some pretty comprehensive charting tools, and it's completely free to download. The tool specifically we want to grab is this price level tool. It's a $ over a horizontal line, and it's going to allow us to draw on these white levels that you're seeing as support and resistance here on this SPY chart, for example. To get some fresh tickers, I'm going to use this random stock picker, and our first example will be DBB. Alrighty, so here we are on DBB, and I've just go ahead and put our sort of checklist up here. I put time times 2, and you'll see in just a moment here, but we first are looking at the daily time frame, so that is important to note. The daily time frame is pretty good for a starting point in general. If you're looking to do a swing trade or an intraday trade, daily levels are usually very important. It's the most widely looked at chart, so it serves as a good starting point. Time times 2 is just there just because we don't want to spend any more than 10 to 15 seconds determining whether or not a level is actually a level. Charting out support and resistance is very visual, and therefore, if you have to spend any more than 10 to 15 seconds thinking about it, generally you're trying to see a level that's not really there. You're forcing yourself to see something that isn't really there, which is not good. And then we're going to look to adjust our support and resistances to get the most touches possible. And we're going to use the zone effect to sort of give ourselves enough wiggle room to not be so precise and exact and beat ourselves up and spend too much time. So getting right into it, I'm going to quickly draw out an area of resistance in here. You can see this is where sellers sort of stepped in. Supply was greater than demand, and prices backed off each time. And then if we're reading from left to right here, it looks like there's an area of support somewhere in here. You can see when prices got down in here, buyers stepped in, pushed prices up, buyers stepped in, pushed prices up. From there, if we continue looking from left to right, it looks like this is an area of resistance. You can see in here, this is where there was a lot of supply and prices then fell down. Prices, a lot of supply, prices fell, so on and so forth. Looks like we have an area of support in here. And then if we continue going lower, this certainly looks like a level to me. You can see all these touches, and then there's appearing to be another one in here. And then if we want to get really granular, then it looks like in here might be our most recent support. So you can see that didn't take me very much time at all. I'm going to go back in and adjust some of these levels. You'll notice up here I did not cherry pick the all-time high because that wouldn't be fair to myself as a trader if I was waiting for resistance to come in only at this all-time high, when in reality it looks like there's a resistance level right before it. So this is what I sort of mean by trying to pick the zones and levels that have the most touches. You can see not all of these touches are exactly to the line, but that's why we use the zone effect to sort of give ourselves the leeway and wiggle room to call this an area of resistance. Coming in down here, you can see, again, I didn't cherry pick this low because that doesn't really include the most data points. Instead, we have all these touches in here, as well as all these touches in here, giving the zone effect some credence there. So that would be our next level. Continuing on down, same thing. I didn't cherry pick this high up here because that's sort of floating in no man's land. Whereas if I chose this level in here, you can see it's that much more important. Touch, touch, touch. Certainly touches in here. You can see some of these candles come up and touch it, but then there was this fake breakout over it. And then in here, there are certainly some touches within the zone effect that give us some wiggle room to call this an area of resistance. Now, the reason we're doing this and we're not going in and drawing in all of these levels is because if you do something like this, next thing you know, your chart is going to have 20 different levels on it, and you're not going to know what is what. So when we're charting out supports and resistances, we want to be very generic and sort of just give ourselves a reminder to look for setups that might be happening around these zones. Continuing on downwards, you can see this was an area of support. Prices came down here. Buyers deemed it a good buying price. Boom, prices shot up as demand went up. Same thing happened here. This is certainly within the web or zone. You can see all this chop around here. Prices eventually made it back up out of there. And then another key important portion of support and resistance is once support is broken, it becomes resistance. And once resistance is broken, it becomes support. So in this example, this was a support level. It was then broken, and it became resistance here, 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 and in here. So that's very nice to see how that works out. Same thing down here. This was an area of support. Touch came in, shot prices up. Again, price seemed to sort of bounce off of this level a few times before breaking down. And then it acted as resistance. You can see it sort of chopped around in here, chopped around in here. And then our next support level was down here as well, and so on and so forth. So this is one example of marking up a chart. Our next example is going to be PINC. All right, we're going to do another one on the daily time frame, so that takes care of our time number one. We're going to spend no more than 10 to 15 seconds deciding our levels. We're going to shoot to get the most touches per level, and then we are going to go back in and make sure we are well within the zones. So starting off, it looks like we have sort of a double top up here. Again, I'm not cherry picking that all-time high, but I can add in a level there just as a reminder. It looks like there is a very key resistance in this area. Again, you can see I'm just coming in. We'll adjust these levels as necessary. This sort of looks like a support to me in here. Looks like there's some support kind of in this general area. Split the difference. Come on, click. There we go. And then maybe this one down here. Cool, perfect. So you can see, again, this all happens very quickly. I'm not sort of standing there and determining, is this actually a level? Is this not a level? Another one I can see just right off the bat is something like that as well. So this is sort of how quickly it happens. Now we're going to go back in and adjust to get as many touches as we can. Again, our all-time high just serves as a reminder once we get all the way up there. This is sort of more, if we zoomed in, you can see that there are more touches to this level than the all-time high. Even if you wanted to be a little bit more exaggerating of that move there, you can see this was resistance, and then resistance, resistance in here as well. So we could do something like that. Again, this is all well within the zone effect, so we're safe there. Continuing on downwards, you can see that this area of resistance was also resistance back here, so I'll extend it. I'll even do this actually. Check that out. Very nice. When support is then broken to the downside, it becomes resistance, and that's a perfect example of it here. Again, I didn't cherry pick this high because it's sort of in no man's land. That level then becomes resistance in here, as you can see. I might even adjust this level further down because of that to get some more of the data points in there. It looks like there are far more touches in here, and we're going to sort of favor more recent price data than past price data, so that looks like a perfect level to me. Continuing on downward, this is sort of like a chop zone to me. This is what I consider a chop zone. So instead of using this as a perfect support or resistance, you can see that when prices sort of get around that level, they start to chop around, rejection, rejection, sort of support, but then a bigger breakdown happened. Same thing here. It acted as support in this area as well. So that's sort of what I would consider a choppy support or just a choppy zone. Continuing to the downside, you can see support, 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 well within the zone. When it was broken, it was then resistance, and then it turned into support, well within the zone effect. Lots of touches and data points in this area. Again, I'm not taking this level, and I'm not cherry picking the exact lows. That just doesn't seem to make sense. Continuing lower, you can see our next sort of support was based on this triple bottom in this area, lots of data points there. And you can see once prices came back down to it, it sort of paused well within the zone there. Now that it's below, it's acting as resistance, so well within the zone there as well. Lastly, our final support and stop below is coming from our touch here, well within the zone, and this is slightly above, but I would imagine if we continue to see a breakdown, price would come down here and find some sort of support before continuing. So our next ticker that we're going to look at is KR. So to go through our checklist, we're going to go through for time. We're not going to spend any more than 10 to 15 seconds questioning whether or not a level is a level. Next thing, we are on the 30-minute time frame. So if you're concerned with an intraday trade, then 30-minute time frame might be perfect for you to start mapping out supports and resistances. And then we're going to use the touches to try to get the most touches per level, and then the zone effect to allow us a little bit of wiggle room. So coming in right off the bat, starting from left to right, it looks like this is certainly an area of support on the chart. Boom, we've got a level in there. Looks like this was an area of resistance as well. So that works out perfect. Next, as we go from left to right, again, looks like we have an area of support somewhere down here. Continuing on, it looks like we have a resistance area in here, sort of support as well, slightly above our previous one, which we can map out there, and then an obvious resistance up here. And from here, we can't really tell based on future data not being there, but it looks like we could potentially have a support level being made right here. So that's how quickly you should go through and do some of these things. We can then come back in as we did on our other charts and adjust to get as many touches as we can. So from here, I might call this level somewhere more around that. As you can see, we get way more touches back here, and then in here we get more touches than just the 1, 2 up top. So we get 1, 2, 3, 4, and then 5, 6. This is well within the zone effect, and then 7, 8. So perfect level there. From here down below, it looks like we have support, support, support. Very good. We have lots of touches in there. It looks like prices sort of hovered around that area in here as well. So perfect. Plenty of touches, and it even coincides with a more recent level. Our next support down below is kind of low. We might adjust that up a little bit higher to sort of get more within the zone of this. These are all certainly within the zone, and we get touches here and touches here. If I went in and again cherry pick the bottom, that doesn't do us very good. Instead, we want to be more forgiving and allow that zone effect to sort of happen there. Again, moving from left to right, it looks like we have a resistance zone in here from all these touches. Sort of nailed that one perfectly. We might even be able to drop it down just a hair. That way we sort of get some of these more of the bodies of these candles instead of just the wicks. So when we do that, we get this one a little bit more as well. And in here, there's even a touch and a touch as well. So perfect. This one might go down a little bit lower. That way we're favoring some more recent price data. And you can see we have touch 1, touch 2, 3, 4. So very good. Plenty of touches there. And then as we continue to our right, our all-time high, again, we didn't mark in the perfect exact high, slightly below it because it looks like there's more touches in that area than the exact high. Again, if we want to keep ourselves a little reminder, sure, we can go ahead and mark in that all-time high or swing high in there at 33.70, but we do want to know that there could be resistance just before that. And lastly, going forward into the future, it looks like prices is starting to bounce here, but we don't know for sure, so we'll mark that off as a temporary support and sort of evaluate it as price continues to either bounce up and off of it or break down below it. CODI. So on this one, we're going to drop it down to our sort of one of the smallest time frames I would recommend, which is the 5-minute time frame. And we're going to go ahead and draw in our supports and resistances. So that being said, we're going to go in and do our time. We're not going to spend any more than 10 to 15 seconds determining whether or not a level is a level. We don't really want to think about it that hard and make ourselves see something that might not actually be there. Come on, click. There we go. That looks good. Looks good. Is this lining up with anything? Kind of. So we'll draw that one in as well. This is kind of a choppy zone. This is certainly an area of resistance, and I would call that good for now. Come on. There we go. Perfect. So you can see I didn't really spend too much time thinking, is this actually a level? Is it not? Again, we want to be very quick with this and then come back in and adjust. We want to pick out the most obvious levels, not really find the really granular hidden ones. So in here, obviously, we're using the zone effect. Many wicks are piercing that level, but it certainly is an area of resistance where supply came in and pushed prices lower. This is certainly an area as well. It looks like we have touch 1, 2, 3, and then multiple touches in here, and then 4. So that is a nice one to note as well. This level looks like it could be extended to the left a little bit to include this, maybe even a little more. Yeah, look at that. Nice. So this includes these touches over here, touches here, and then as we continue forward, it looks like it was resistance as well. From there, continuing forward, we have a resistance level here at 1850. Very clear touches, touch, touch, touch. These are all very exact. This is what you like to see happen, but again, using the zone effect, it is a-okay to have a more choppy zone, something like this. This next support below was support here, and then once we broke down below it, it offered resistance, which is, again, a very key principle of support and resistance. When one is broken, it turns into the other. And then lastly, our support down below here, you can see acted as support in the past. Very, very weird support. This hammer candle is very odd, but it did bounce from that sort of level. Then once we broke down below, you can see it did act as resistance from the bottom up. TKC. So in this final example, we are going to go through a weekly time frame. So this might be more important for someone who is a swing trader, someone who's looking to make some longer term holds. Again, we don't want to spend more than 10 to 15 seconds, and we're going to use the zone effect as well as try to get as many touches as possible. So again, we can mark off our all-time high just as a reference point for us, but it looks like there's some resistance. Come on, right there before. Perfect, got that one. This is certainly a resistance level. You can see all the times prices were rejected over that level. For support below, it looks like prices are sort of bouncing from this area more often than not. And then another one below, I would sort of call this area in here. And then we have this support down here. Carrying forward, this one looks more like that. And certainly this is sort of choppy, this more recent price data, but we'll do something like that. See, again, emphasizing the quickness, we want to point out the most obvious levels. We don't really want to go in and cherry pick all of everything. Well within the web up here, this level we can adjust a little bit if we come in to grab our hand tool. You can see if we move it, actually it was pretty good to begin with. You can see it acted as support here. Buyers deemed this a fair price. Good amount of demand here, sended the price back up. Same thing happened here. Good amount of demand, sent prices back up. And here as well, you can see it acted as a quick little bounce, and then once we broke down below it, when support is broken, it becomes resistance. Resistance once, twice, 3 times, 4 times. That is a great level of support and resistance at 1087 on this chart. Continuing to our right, you can see this level up here acted as resistance. We didn't go ahead and cherry pick that. We didn't cherry pick this. Again, we're looking for the most touches as possible. So this is well within the zone, zone. So that way we have 5 touches as opposed to just 1 or 2. Next one as support below us here. Again, I didn't come in and cherry pick this low in here, although it looks like I could have. I think this is a more valuable level to have because it acted as support here, well within the zone here, zone, and then once we broke down below it, it acted as sort of a chop zone in here as well. Coming on forward to the right more, you can see this was certainly an area of support. Prices bounced from here, and then were rejected from here as we talked about this resistance level. And then it offered some support in here as well, where price sort of consolidated sideways just above it and then bounced up to our next resistance point. And then our last, or our sort of next area of support, we adjusted it up slightly to encompass this area a little bit more. You can see it bounced from here. Prices sort of got caught up and consolidated around that level here. When prices broke down below it, it then turned into resistance here and here, so that is a good level to have as well. And lastly, this 503 More recent, and again, this would be something that you have to monitor to see if it acts as support as we continue into the future, but certainly touches here in the zone, in the zone, in the zone, and in the zone as well. So that's sort of going to wrap that up. This is sort of how you draw in supports and resistances in the quick and dirty way. Again, we're not trying to be exact and very specific and nail it to the penny. We want to sort of point out the most obvious levels where there could be a price reversal or a price breakout, and that way we're not spending too much time beating ourselves up, and we're aware and just sort of knowing what's going to happen around certain key price levels. So just to recap real quick, a support area is an area of demand. It's where buyers step in and push prices higher, and it happens historically over and over again at a similar level. So that's at this area here. And then supply is resistance. Think of those two as the same, and it's where sellers step in and push prices lower because there is more supply than demand, and it happens historically over and over again around a very similar level. And last but not least, we want to remember our 3 key steps, which are pick the appropriate time frame for the trade you're about to make. You don't want to be looking at the 5-minute chart if you're trading on a weekly time frame, or vice versa. And we want to draw levels with the most data points. That way we have a more solid level to go off of. The more data, the better. And we want to use the zone effect to allow ourselves enough wiggle room. And lastly, what's not really mentioned here is that we want to do all of this rather quickly. We want to spend no more than 10 to 15 seconds determining whether or not a level is support or resistance. That's because if we do so, then we might be overthinking it, overcomplicating it, and trying to force ourselves to see a level that isn't really there. And lastly, we want to make sure that we are focusing on more recent price data, PD, because the recent price data has more impact than past price data. So remember, FRPD. Sure, you can use that as an acronym. So with that, that's going to wrap up the video. If you learned anything or found this video valuable, leave it a thumbs up or let me know down below in the comments section. If you think someone else might benefit by watching this video, feel free to share it with them. I would greatly appreciate that. And with that, I wish you a happy trading journey. I hope you know a little bit more about support and resistance now and can implement this into your daily trading routine.